get back to the big CNBC TV exclusive, while the market settle down, we have time to listen to some words of wisdom. In our series, Wizards of Dalal Street, Ramesh Damani has been speaking to several marquee investors, and this one is Morgan Housel. You just heard an award-winning journalist, a personal finance columnist, very famous one at that. He's talking about behavioral finance and changes in consumer behavior in terms of stress. Must be very useful in these times. Listen in.
Over a single person's lifetime, progress tends to be not only present, but very large. But in any given moment during that period, there is constantly something to worry about, something in the news that looks bad, that looks terrible, that looks like something is going to preclude and derail long-term growth. So I think a realistic optimist is someone who says, look, we need to recognize that what we are going through this year in 2020 is the worst economic recession since the Great Depression, the worst pandemic globally since 1918, but I'm still an optimist about the long run. I can recognize how bad things are and acknowledge how bad things are and take empathy with the tens of millions, hundreds of millions, maybe even billions of people around the world that are dealing with the worst economic crisis of their lifetime. But I'm still a long-term optimist about the United States and the global economy. Those two things, it's hard to marry those two things, but I think it's important to have a barbell personality that lets you accept both of those things at the same time.
An example of that would be, as you mentioned, Germany post-World War II.
Yeah, so there's this interesting thing about Germany at the end of World War II, where in 1945, Germany's economy was completely obliterated. It had been bombed to rubble by the Allies at the end of the war. There was almost nothing left of the German economy. Its GDP had been pushed back to lower than it was in the 1870s. So just a complete wipeout of its economy. And it only took about 3 years for Germany's economy to rebuild and exceed its post-war, its pre-war GDP. So to completely rebuild its economy only took about 3 years. No one thought that that was going to be the case. No one thought that it was only going to take 3 years for its economy to rebuild and get back to where it was before the war. But that's what it was. So there's actually a long history of economies all over the world. It was the same thing in Japan at the end of the war. It's been similar in cases like New Orleans after Hurricane Katrina in the United States, that you can have extreme devastation to an economy and still have, in a fairly reasonable amount of time, 3 to 5 years, rebuild that economy completely.
It's going to change behavior in a lot of ways. Can you point out two significant ways in which behavior will change in the post-CV-19 world?
Let me first just start by saying what I think will not change. I don't think if we are to fast forward, let's say 2 or 3 years, and I'm going to cross my finger and say we're all vaccinated by that period of time. It's no sure thing, but let's use that as a baseline assumption. I don't think there's going to be a dramatic change in consumer behavior. People are still going to get on airplanes. They're still going to go to bars. They're still going to pack into nightclubs and restaurants. That I don't think will change. I say that for 2 reasons. One, if you think about the closest historical analog to this, it's probably the 1918 flu pandemic. And if you go back to the period after the 19 flu pandemic, the early 1920s, I haven't been able to find any evidence that people were scared to go to restaurants, scared to go to bars. The 1920s were in the United States was the era of the jazz bar, where people were packing tightly into these nightclubs and having a good time. That was just a couple years after the 1918 flu pandemic.
In fact, it was called the Roaring Twenties. It was called the
Roaring 20s.
20s.
That's what it led to, right? And even in the United States after September 11th, if you go back to the months right after 9/11, a lot of people said Americans are not going to fly again. They're going to be too scared to get on airplanes. They're not going to travel. They're not going to go on vacation. And that was true for about 6 months. And then we all got back on airplanes, and it was everything. They were cautious. They were worried. We had enhanced security, but people got back on airplanes. So I don't believe that just because what we've gone through this year, that consumers are going to drastically change their behaviors.
Yes, I think that's a very valid point. In the near term, of course, there will be an impact, but 3 to 4 years from here, the human race perhaps will adjust and we'll go back to what we love, doing the most. By the way, the pre-open has settled now 90 points higher on the Nifty and about 228 points higher on the Bank Nifty. This is way higher than what the SGX Nifty was indicating. Let's see if the SGX Nifty is also now picking up and is at 10,301. Let's take the 9-10 calls then. Banks, of course, doing well, and ITC ahead of numbers is also doing well. Ashwani, if we open here, what's the trade and what's the 9-10 call?
Well, I would believe that the market is taking a message from S&P 500, etc., that it's not so bad, and these over short positions are likely to get covered. At the open, I would think that you should be playing for upside with an entry, closer to say 10,300. For the moment, I think Chola investment appears to be a buy. There is some, macro news expected, so that should do well. This is a buy with a stop of 200, target of 215.
Okay, that's a call on Chola. Mitesh, what's your 910 call?
I would choose a buy on Apollo Hospitals. I think, buy with a stop at about 1410 sorry, I think I got the levels wrong, but levels will be on the screen. But I think the short-term pattern is very strong for Apollo Hospitals.
Got that. Stay on, gentlemen. Prakash, what would your big call be?
Good morning, Lata. My call would be ITC. I think it's going up to levels closer to 210 or even higher. Stop below 198.
Okay, ITC comes out with numbers today. Revenues are expected to decline both because of the lockdown as well as the excise hike that took place. But let's go across to Manisha Gupta, our commodities editor now. She's going to tell us what is happening in that world. Hi, Manisha. Good morning.
Morning, Sonia. A couple of things that the commodity markets do not like is the strength in US dollar, the increase in coronavirus cases, and also the trade tensions between the US and European Union. So the crude oil prices overnight gained 2%, but for the week they are headed on a decline here. The positive for the crude is that the data shows that there has been an increase in vehicle traffic in major cities in China and US and Europe as well. The flight frequency has been increasing. The employees are phasing back to work. And the couple of data points that came in from US were positive. The unemployment benefits rose less than estimate, and the capital goods data also was on the positive side. When you look at the base metal prices, well, this week is closing quite flat for these. On one side, you have strong economic data. You also are looking at strong demand continuing from China. There are supply concerns from Peru and Chile. These mines have reported a lot of coronavirus cases. So frequent closures of these mines for sanitization is what has led to a lot of loss in production. That has been supportive for base metal prices. A final word on gold. And while we are off the highs that we were trading in this week, but we still are headed for a weekly gain, and with the kind of uncertainties that we are looking at in the global markets, we have seen the net longs continue to surge up.
Yes, they are. Manisha, before you go, I must tell you, we started the show playing a bite from Lawrence Belanco, the technical expert, and guess what? He didn't even bother about talking about equities and Nifty. He said gold will go to 1990. Do we have that plate with us? That's his call. His best call is gold looks set to go to first, I think, 1800 and then 1990. So that would be a new high. The previous high was only 1950. So there you are. Cheer up, Manisha. Good days are coming for you. All right. That's the word on commodities coming from Manisha. We have to get back to equities. And as Anuj and the technical experts were pointing out, heading the list of gainers today is ITC ahead of its numbers. So what will the numbers tell us? Mangalam is here with what the street is expecting. Tell us, Mangalam.
Well, Lata, like you said, the stock has moved higher ahead of numbers, but still trades at attractive valuations close to around 14 times as against other FMCG stocks, which are much more expensive. This time around, 4 things to watch out for ITC because it has divergent verticals. The first one would be the cigarette business. Out there, we're expecting a 4 to 5% sort of decline during the lockdown period and the last half of March, that is. And there's a double whammy out there as well. Remember, it's also the quarter which did see some excise hikes on account of the budget. The second thing we'll be watching out for is commentary on how the FMCG businesses performed. Like Britannia and the other companies have said that there has been a lot of stocking, especially in the foods pack. So let's see how ITC performs out there. They do have some strong food brands out there. The third one that we'll be watching out for is the business performance of their hotels vertical, because that's been the worst hit sector on account of coronavirus. So any commentary out there would be important. And finally, this time around, we'll also watch out for dividend, because the company changed their dividend policy from 65% payout to around 85% payout. So that means that the company could go ahead and announce a 9 to 10 rupee dividend this time around as well. So those are the 4 key things to watch out for. In terms of numbers, we're expecting a 3% decline in the company's revenue this time around, 5% decline in the company's revenue. The EBITDA actually declines by about 3%. Margin stays stable at around that 37.5%, 38% mark. And finally, the net profit sees a mild gain of about 2.7%. So the number that you're looking at is up for you on your screen. The numbers more important, commentary even more important.
Okay. Okay, Mangalam, thanks a lot for that. Now, look, now keep in mind this week the stocks up 12%. I mean, and